please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, well, just about 15 seconds. So let's wait by and see how the market opens. At the moment, it looks like it's 0.2 up on the Nifty, but a good 0.5% higher on the Nifty Bank, thanks to the Bhushan news, perhaps, that's yanking up SBI, ICICI, and some of the other PSU banks. Well, there goes the bell, 0.2 higher. So 20 points up on the Nifty. So it's 10,614, 15 thereabouts, and 34,925 on the Sensex. That's 80 up. Again, about 0.2. Now the Nifty is given up a little bit. Midcaps are flat, and the Nifty Bank continues in the pre-market mood, up about 0.5%, 140 up on the Nifty Bank. Tallest gainer in the Nifty is SBI, up 1.7. It has about an 11,000 crore exposure to Bhushan, and therefore the biggest beneficiary of the deal going through. Ultratech Cement now takes the top slot with a 2% gain because of a very good deal that has helped it by the cement division of Century Textiles. Tata Steel up 1.4, HPCL up 1.2. That's a bit of a relief because they were sold a goodish bit last week when crude was touching 80. ICICI Bank up 1.2. Then come the others. TCS, Hindalco, ONGC, Grasim, Bharti Infratel, Coal India, all of them up about 0.5%. And the Nifty goes into the red. So the red brigade. Indiabulls Housing, as we have been saying, housing stocks are under pressure after the rise in yields. 2% higher, lower on Indiabulls Housing. Bajaj Finance is profit-taking, 1.5 down. Maruti, 1.5 down. Infosys, 1 down, 1% that is. And then come Bajaj Auto, Sun Pharma, Wipro, Axis Bank, ITC, Hero Moto, all of them down about 0.5%. Net Nifty a bit in the red, and Bank Nifty loses much of the gains, now up 0.25%.
Oh yes, in fact, the mid-caps are under a bit more pressure than the frontliners, so down about 0.3%. The market breadth has already started off on the back foot, 650 stocks on the declining side. The stock of the moment now is Kitex Garments, almost a 20% knockdown on that stock. Remember, as I told you, the numbers were very disappointing this time. The margins have cracked almost half this time around to about 14%, and Kitex is getting hit quite badly. Century Textiles is the other one. On expected lines, that stock is down about 6% after the deal with Ultratech Cement. But you do have a couple of other stocks that deserve mention. Amara Raja Batteries has reported almost a 3.5% fall in the early moments of trade after that weakness in the margins this time. Stride Shasun is down another 3%. It's now lost 50% of its market cap this year, and it's now well below that 400 rupee mark. Motilal Oswal, as I said, has halved their target price on this one. A couple of other stocks, Crompton Consumer has lost some more weight today, down almost about 2.5%. And some more result reactions. Inox Wind reported a weak set of numbers this time. Thermax was an operational miss. So these are a couple of other stocks that could be in the red. Yes, Inox Wind now down about 1%. Balaji Telefilms as well. Prabhat Dairy, by the way, reported a good set of numbers. So that stock is in the green, up almost about 0.6%. But otherwise, it's weakening some more now for the mid-caps. It's falling quite rapidly. 130 points gone. And, you know, a lot of your usual suspects, Reliance Communications, Indiabulls Real Estate, Ashok Leyland is now down about 3% So I guess the mood is one of profit-taking.
Oh, yes, Sonia, you know, you needed to scare the bear. The bear won't get scared with about 100 points. And, you know, that immediately has been sold into. So, of course, Ashok Leyland is the stock to track. But, Ashwini, your thoughts on market opening and any interesting stock idea?
Well, it's not a good open, and the Nifty is already broken Friday's low. I think several sectors started higher, but a lot of big selling is happening. I think Century Textile, that you can go short on, and on the opposite side, Ultratech, maybe you can buy on. So I would think that Century Textile should have a weak day. But overall, you know, this PSU bank rally may not sustain for a long while, because the mid-caps are coming off fairly strongly, and, you know, good news, chances are, will invite more selling. So that way, other than 4 or 5 stocks, maybe an odd TCS, I don't think much on the upside. But Century should see lower levels.
Okay, the stock of the moment is Amara Raja Batteries. It's showing the similar traits of what an SRF did on Friday, because, you know, there are a lot of long positions in Amara Raja Batteries. and all of a sudden, almost everyone's headed towards the exit door. So 8% lower on that. This one could have really a trend day because it's had a big rally. And now, on top of that, there's been a big decline backed by the numbers, Sonia.
And also at a time when its peer Exide is doing well in terms of earnings, its margins have improved. So it clearly is a pricing power issue that Amara has versus Exide, and that's something I think that the street has figured out. Exide is also down, of course, no taking away from the fact that the entire market is under pressure, but the selling pressure on Amara is exacerbated now. So Darshan, any thoughts on how to approach this pocket?
Well, I don't have an opinion on Amara Raja Batteries or that group. But the Nifty Bank still remains a buying opportunity with a stop under 25,800, and the Nifty is best avoided.
Okay, Ashwini, do you have a thought on Amara Raja?
See, Maharaja, I think, fell even on Friday. Now, again, it's had a bad open. So my sense is that you could have further downside. Today, it's even broken the 200-day moving average. So if this mid-cap sell-off continues, I think a Maharaja could easily get back towards 670, 680.
Okay, and finally, thoughts from Mitesh, any trades?
So I think it's a choppy opening, Lata. We had a positive opening, then came down again, trying to recover from there. The key stocks, I think Maruti was a sell call today. I think Maruti, it looks like a stock which could be under a lot of pressure in coming few days. And Havells is breaking down. That about, I think the Bank Nifty for me, as Sudarshan also highlighted, I think remains a buying opportunity, closer to about 25,850, and the stop loss should be below 25,750.
All right, gentlemen, thank you very much for your early morning and pre-market trades. We will, of course, I think, need your help much oftener today, given that it's such a choppy market. Now it's recovering a wee bit from the early morning, from the, the 916 sell-off, if you please. And the Nifty Bank is now put on 0.4, actually, and the Nifty is just about in the green. Very, very flat, but a small green tick is what you can see. With that backdrop, let's invite our market master for the morning, Sridhar Shivram, Investment Director at Enam Holdings, is with us in the studio. Good morning, Sridhar.
Thanks.
Always a pleasure having you with us. Well, first up, political developments. Should one really bother about it at this juncture? After all, it's higher tally for the BJP. So would the market take consolation from that, or will it worry that an anti-NDA formation is getting cemented?
So over a medium term, politics doesn't matter. So we go back in history and check what has happened. In fact, I saw one of the journalists who came on your channel recently said the markets love BJP. That's everybody's loving, but that's not the case, because when UPA 2 came, the markets were up 20%. So I think even journalists have very short memories. So I'll not worry too much about, one state here and there, as long as, the broader reform process is still in place. Which may be a question mark right now, given the way macro is positioned, which is why I guess the market's a bit worried. And you can also see that in the bond markets and the currency markets. So I guess that's a cause for concern.
That's what a lot of people have told us, so your view echoes with a lot of the market experts before you. Are you worried about the way crude is headed, or do you think that it could be a global US bond yield surge that could, sort of have ramifications on our markets?
So if you see the emerging market performance this year, and you see the countries that haven't done well, both in terms of currency and equity markets, the old fragile five is raising their head again. Indonesia, Russia, Brazil, South Africa. India not to that extent, but even India falls there because the currency is already depreciated 5-6%. MSCI is down almost 9 to 10%, the India MSCI dollar returns. So I guess it is factoring in somewhere there that markets in general, for emerging markets I'm saying, are worried about countries where the macro is deteriorating. Having said that, it is not the same level as it was in 2013. I mean, our current account deficit was 5+%. We are much better positioned this time around. But yeah, crude is a worry, and there are a lot of other macro headwinds that we are facing. I would say macro is a worry, and it's reflecting in the way the markets are behaving this year.
Sridhar, good morning. From my point of view, the thought I have is last year was such a good year for equity investors and domestic investors. Right. We've already seen that. I can see that on Twitter. I can see that how people are complaining already about their portfolios being down 30-40%. In that sense, your thoughts on the way some of the mid caps have fallen, and is there an opportunity here with the kind of fall that we've seen?
Yeah. So This has been my view that 2018 is a tough year and you try and protect your capital. And because of multiple reasons, that 2017 was so good and the volatility in the market was so less. I was reading a newsletter recently that S&P 500, the 1% moves for the current year is almost 30 or 40 out of the total trading days. It's already more than the full 1% moves of last year. And if it continues this way, so I'm just trying to highlight that the volatility in global markets have gone up. We've had a very calm 2017, not only globally, even for us. So those sort of years don't come very often. And when it comes, the year after that is always not so great. So which was my view, that protect your capital for 2018. Markets had run up well ahead of its fundamentals. We are now seeing some micro improvements, which is great, but we want to see that this continues for a few more quarters for it to sustain. So I would say 18 is tough. That's how.
So from now to the end of FY19, that is March, when the election season also will be on us. Will you lose money in both bond and equities? Will you gain money in equities but not so much? So what would be the relative preference?
Yeah, so it's a tough call to say whether you'll gain or not. I would say it's better to look at stock specific, as we're already saying that companies which deliver earnings, doesn't matter what the macro situation is. There are periods when you play macro, where you know that the macro is improving and the market's not discounting that. Say, post-taper tantrum 2013, when we saw a lot of policy initiatives and you could play a macro trade. This is not the time to play that macro trade. This is the time to be very careful with your stock selection and look at some of those and identify and invest. So I wouldn't bet on what will happen to the market, because very tough to play too many moving parts. It's easier for me to bet on my stocks.
Okay, well, before we start talking about your stocks and the preferences, I just saw this picture. You're back from a holiday and you clicked this fabulous picture. I think we have it as well. Where was it? It was some wildlife trip you went for?
Yeah, so I told some of my friends that I'm going to see a lizard, and they said, what? Lizard?
Wow.
And so this is a very unique thing that happens in Maharashtra and Satara. It's called a fan-throated lizard. This is a courtship display by the male. It happens only for about 15 days in a year before the breeding season. So this is the male trying to attract the female. This sort of display happens only for 15 days, and you have to go there to see.
Where in Satara?
So this is where these...
Near Mahabaleshwar or something?
No. So there is a plateau called Chalkewadi Plateau. That's where all the windmills are there. Okay. So it's... I know people find it strange if I tell them I went to see a lizard. But I guess this lizard is worth going and seeing.
Oh, it is.
Okay, so we had to interrupt the market conversation because I didn't want to run out of time. I wanted to really see that picture. But anyway, coming back to the markets, where do you see opportunities now? Because, it's hard to pick stocks at a time when there's so much turmoil. You think FMCG, autos, consumption is the way to go?
So we are already playing the consumer theme, but if you ask me opportunities, we've been on this trade and it hasn't worked, which is the corporate bank theme, because we think that the NCLT process is working quite well. It will surprise the market. It has its own challenges on the way, which is a lot of things are going on to the court. But we think once Supreme Court or any of the higher courts give a judgment, there is a direction to this, some of these banks will have a lot of write-backs. We are working with a 50-55% loss ratio for the entire basket. So we would see some of the steel ones where the loss is lesser, but when you come to gas-based power plants, the losses will be higher. So we are not going with this. We are not bullish because one of the plants where the loss was only 70% or was less than 30%. But we are going with the assumption of 50-55. But even if that be the case, what happens is that these are assets which are not generating any income right now. So your P&L will improve because once a new taker comes in, it becomes a performing asset. And then also on the balance sheet side, your NPA comes down. So your P&L and balance sheet both improves. But this is a long trade. It'll take time for it to, play out. You need patience in this. And we think some of the corporate ones, the private ones are better positioned because your collateral damage because of many of the other issues which are going around is lesser. But maybe some of the bigger PSUs may also benefit.
Okay. Yeah, we did some math. It's about 90,000 crores according to me from all the steel assets, but nothing from the rest. But anyway, which part of the finances, other than the corporate-facing private banks, will you play? And I'm including the NBFCs in that entire range, and it's 40% of the market by weight.
Yeah.
What's worth sticking to?
Yeah, so I do have my biases for many of the NBFCs which I don't like. Housing is one of them because I do find that many of them are really not mortgage players because their corporate book is so huge. So I'm not saying all of them.
No, lately the market is agreeing with you.
Yeah, so I've been talking about this for almost more than a year that, look at the housing finance companies, they are camouflaging what actually they are lending to, and that is a challenge. The consumer facing ones are much better because if you look at India's credit to GDP for the consumer as a basket is very low. So the opportunity here is good provided you pick the stocks correctly. I'm not a big fan of MFIs in general because I think they have their own challenges. Every time there is a loan waiver, we'll see some issues. So that's another basket which I'll be careful. Life insurance, I just don't understand their maths. I mean, paying 5 times embedded value, whereas embedded value itself is a present value of the future earnings of the current business. It just doesn't add up. So I have too many ifs and buts in this financial basket. Maybe I'm an exception in this, so I'll be very careful in buying what I like.
Maybe your choices in the stock market are as offbeat as your travel choices, right?
I hope so. Some of them don't always work in the short period of time, but I'm keeping my faith in my
I want to just point out a couple of stocks, by the way, before we move on. The Just Dial, which is out of F&O ban, is seeing further decline, so that one is down 4%, and SRF as well is making fresh lows. Coming back to the mid-cap theme, one theme which has really worked wonderfully is the whole consumption theme, and it sort of managed to survive the last downtick as well.
Yes.
You think it will survive this one as well?
I think it will survive because many of the consumption themes, including staples, had some issues. When you had this demon GST issues, they're coming out of that. And in many of the cases, if you look at global comparisons, the consumption as a percentage for that particular segment is very low. I would say consumption as a basket will continue. It will be a multi-year theme which will play out. So both discretionary, staples, durables will be long. One have to look at the valuation, so you can pick and choose your companies. So it's not like everything is out of place.
IT is one space that did you feel you missed out on it? I mean, you've not liked it for a while, but it's done so well.
We have difference of opinion in our own house. I still believe that this is a value trap, and I've maintained this for over 3-4 years now, because I don't see them actually adapting to the change that is happening globally. And you look at IT companies, say in China or many of the other emerging countries, they have built massive, companies, and not just the Alibabas and the Baidus of the world. Even smaller Chinese companies have cutting-edge technology. And whereas India's continue to follow this, this model of outsourcing and this wage differential, trying to benefit from that. Only now people are talking of digital. And I'm not sure that the employees are equipped to handle this change, which is they had silos built for ITs, which is particular IT company will have people who are specialized in testing, in system integration. When it comes to digital, you need a single person knowing all of it together. I would still be very careful, cautious on this. 8-9% doesn't excite me, and that's the growth they're guiding for.
Yes, they are. Thank you very much, Sridhar Sriram. It's always a pleasure having you with us. Do join often.
Yeah, sure.
Especially when you go for one of those holidays. Okay, we have to shift focus to the stock that's not at all doing well today. I think 6% down on Ashok Leyland. And that's, of course, said earnings were fairly stable on Friday, but that was a higher other income which boosted the profit. Numbers overall below estimates. Vinod Dasri, Managing Director, joins us now with more details. Good morning, Mr. Dasri. Well, after what has been a really strong year, what will FY19 look like?
The performance last year was quite pleasing despite all the challenges that we had, whether it was the start of the year with the sudden Supreme Court ban of BS3 vehicles to GST and the significant shift towards higher tonnage vehicles. but we came through very well. I think it was one of our best years ever. We maintained our market share despite many challenges. We grew on the export markets substantially. We turned around our LCV business and had substantial progress in that. We turned around our foundry business and made it profitable. So all in all, it was a fantastic year. Very pleased with the performance on a qualitative basis. We were rated as one of the best brands. Our CSR was rated one of the best in Asia, and we were rated as one of the best places to work. So I think all the credit to my team for doing a fantastic job last year. All the leading indicators for our industry are positive, whether it is the GDP or infrastructure or the mining. So I hope that this year also we will see a similar kind of growth that we saw last year.
Okay, so when you say similar kind of growth, Mr. Dasari, could you elaborate? What growth rates are we looking at for FY19?
Well, MHCV, there was a 12% growth last year. And notice that the growth in tippers was only 6% last year, but in the last quarter it was about 15% when the infrastructure boom started to happen. The infrastructure boom continues to do very well, and this is giving a very good raise to the tipper demand. The hub and spoke model has also pushed a demand very high on the intermediate commercial vehicles as well as a very heavy tonnage vehicles. So unfortunately, in a couple of states in Uttar Pradesh and in Rajasthan, we're starting to see some overloading happening. Last year, the same governments had done very good job in controlling the overloading. So I hope that now they will do that again, because it is critical to maintain better roads as well as safety. And if the overloading ban continues in these places, then I think the demand will be even higher than last year.
Mr. Dasari, good morning. So if the overloading ban gets relaxed or lifted like we've seen in Uttar Pradesh, will the growth rate still be the same?
Not really. I mean, Uttar Pradesh is one state where there was a lift of overloading ban last year, and which led to a very good surge in demand in Uttar Pradesh. This year I'm told that there is overloading, especially in the sand and gitti market that is used for infrastructure. But I think the government, who has done a very good job last year in controlling the overloading, because obviously it's not safe and it's not good for the roads. I don't think it has anything to do with election year or that. I hope and I urge the government to implement an overloading ban, because it's bad for in many ways.
Okay, now let me get to the other one. Is it easy to pass on the higher raw material costs, or should we brace for some pressure on margins to build up over the next quarters?
I think I don't know if it will be a straight line increase in realizations, but there is a commodity cost increase and we are passing on that. We were the first ones and probably one of the only ones as of now to have passed on the commodity cost increase. We increased our price by 2% in April and will continue to do so every quarter.
That's fair. The entire sector has done that, but the feedback we're getting is that despite passing on commodity costs, there could be a pressure on margins. I mean, for the sector, discounting is still quite high. What is your own expectation?
No, I don't believe so, Sonia. I think the demand is strong. And we strongly believe that we should not create a pricing policy which is focused on buying market share. We will work hard and sell our products based on the performance of our products and not on the basis of price. I will not go out there and try to buy market share. Market share is important, but profitability is also important. We have consistently maintained a double-digit operating margin for last several quarters and all the time that you and I have also talked about. And we'll continue to maintain that.
So, can we expect another year of double-digit growth?
Yeah, I believe so. I think you will continue to see a similar kind of growth as last year. And then the year after should be even bigger growth. I think you should have at least a 20% growth because they'll have the Euro 6 pre-buy. And the year after that in FY21, when in April 2020, when Euro 6 comes in, it's the same time when the scrappage scheme is coming. So whatever is a downturn expected due to Euro 6 will probably be made up by the scrappage scheme.
Okay, Mr. Dasari, all the best. Thanks so much for joining us. That's Vinod Dasari of Ashok Leyland saying that FY20 will be a very good year for the industry. FY19 growth rates will be similar to FY18, but in FY20, there will be a 20% growth in the CV industry. And they will not sacrifice profitability at the cost of market share. Let's take a break on that note. AU Small Finance will raise about 1,000 crores. Deepak Jain, the CFO of the company, will join in next.
Well, just a word on the markets at this point in time. Still, the struggle is at the moment getting being won by the bulls just for a bit, just for a smidge. The advanced declines are still a little negative, 1.3 stocks in the red for 1 in the green. But there is green, and especially in the Nifty Bank, with some handsome gains being made by corporate-facing banks and, more importantly, the public sector banks. That's what makes you a little uneasy, whether there would be very quick profit-taking as well. But one segment of the bank has got full marks, and that's the small finance banks. AU Small Finance Bank has done some fundraising of over 1,000 crores from Temasek Holdings. Deepak Jain, the CFO of AU Small Finance Bank, joins us now. Good morning, Deepak. Thank you very much for joining us. Can you first tell us some facts about the capital? How many shares are issued to them? Do they get a board seat? Details like that?
Yeah, good morning, CNBC. Good morning, Lata. As you know, the bank is growing last year with 60% growth in disbursement and 50% growth in AUM. So, company decided to think about to raise the capital to cater the future need of our growth. So, we got a term sheet from Temasek, which is a binding term sheet in which they told to invest 1,000 crore in the AU bank in form of equity and convertible warrants. The money will come in 2 tranches. First tranche will come in next June 18, which will be around 47.5%, 475 crore rupees, and rest 525 crore will come within 18 months, which will near to December 19, by which this investment they will get 4.81% holding in the bank. This is the largest investment in AU. After 2012, company is raising 1,000 crore capital.
Is the equity dilution?
So the price is valued at the SEBI floor price, which is 2 weeks average price defined by the SEBI in their formula. The price is coming 692 per share.
Okay. So, Mr. Jain, with this capital raising, what is your total capital adequacy ratio at the moment? And do you need any more capital in the near future?
So as on 31st March, our capital adequacy was 19%, consisting of 18% Tier 1 and 1% was near to Tier 2 capital. Okay. By infusion of this capital, we will able to maintain our overall capital adequacy ratio more than 18%, consisting of around near to 16% in Tier 1 form and rest will be in Tier 2 form. Okay. And we don't see any further Tier 1 raise because we are getting this money in 2 tranches in next 18 to 24 months.
So for 24 months, you won't need capital, is what you're saying?
Yeah.
Okay. What will this do to margins immediately? I guess you can improve them?
Yeah, definitely. It will help to improve our margins also.
Okay. What about business otherwise? I mean, we are getting some reports that, you know, the SME business has not seen a great amount of pickup in terms of loans. The sentiment has been quite muted. Would you agree? And what's the growth outlook like for the next 1 year?
No, I told you that we did a growth of 50% last year in terms of AUM, and we are basically the same will be continue. And since we are in a very deeper penetration in the market in the rural areas and semi-urban areas, and we are looking very good demand in the market, we don't see any challenges into taking the growth in the next 2 years.
There is a brokerage which has said that they expect your assets under management to grow over the next 2-3 years, I think up to FY20. They expect a growth of 33% compounded annual growth. Is that fair or you can do better?
Yeah, it will be better than that. I can say that.
Oh, very good. That's good to hear. And what may you be able to therefore give in terms of an ROE?
ROE last year was around 14%, and this capital raise will also help to maintain the same. And since the growth is good in the bank with good ROIs, so we expect the same level will be maintained.
Okay. Any other capital raising at all for the next 24 months? Anything else?
No, nothing. The rest will be taken care by the Tier 2 capital only.
Okay. You said your margins will improve. How much you think?
So it depends on the interest rate cycle basically, which although it is an upward trend, but we think it will be some cool down. So the margins which our NIM was around 5.2% in March 18. So we think it will be near to in the same range. Okay. In spite of increase of interest rate.
Can your NPAs fall further? And your provision cover is only 37. You may want to increase that?
So it will be grow gradually, because if you remember till March 17 we were writing off our loan more than 360 days. So now we are making provisions from once we become bank from 1st April 2017. So it will be grow gradually over a period of time, because now the provision amount will be higher than, because earlier we are writing off that loan.
Okay, Mr. Jain, thank you for joining us and giving us your time. That's the word coming in from AU Small Finance. The stock is doing well. Yes, very good numbers.
Raising capital at this level and being able to promise well over 33% compounded annual growth for the next 3 years is extremely positive.
It is, and for the market as well, the Bank Nifty is really leading the market forward. So you have a lot of banks even in the broader markets, Canara Bank, SBI, PNB, Union, ICICI, all doing well. We'll take a break on that note, but back to earnings next. Sumit Kapoor, the CFO of Z Media, will join in next.